Hey, what's up? I'm getting some coffee. I'll be right there. I'm not gonna, Jason, I'm not gonna look at other stuff today. So, sorry. I don't have time for it, and I'm not gonna do it. Unless it's just to kind of overview what's going on with the market. So, I'm gonna just be doing an AMC GME stream. Sorry. But I've really been focusing on trading in my own time, and I tried making this like a trading channel for a while, for a good portion of a year, and it's just not really working. And it's not because of other people necessarily. It's really just me, because I can't manage both. It's just not my, I don't know, not my gifting, I guess. I can't seem to do it. I'm not organized enough. I can focus on like one thing at a time, either charting or trading. But when I start doing both and stream at the same time, it's just a cluster cuss of mess. So I'm not going to be jumping around looking at different things. You're on your own, so to speak, when it comes to your trades. And that's always been the truth. But really just going to focus on AMC and GME for about 40 minutes here. And it's not because, again, like we could go back and forth every other day about this stock, and I was doing that for the greater part of 2 years, really the greater part of like 4 years now. I mean, it's 2025, and this whole thing started, and I entered it in 2021, and I started streaming in November of 2022 or something like that. So I mean, there's not streaming, but doing videos. There's a huge amount of time that's been spent on these tickers, and I already kind of expressed that I'm basically over it. So I'm not going to get on every single day and talk about it, but we have a 2 year cycle here, and I don't want to leave that without any kind of real follow up. So I've been doing a lot on the Discord group in order to keep people informed. People that want to be informed in that group, they can be informed in that group. And thus far, I haven't seen anything that's particularly surprising at all. And I don't mean that in like a really, like everything that's happened is pretty straightforward, is what I'm trying to say. There's some concerns that I have right now that I'd like to express. And I think that when we express those concerns, it'll be clear what the concern is, why it is concerning. And I think that there's a misunderstanding too, because it's one or the other for people, right? You're bearish or you're bullish, and I get that. I get that. So when you look at big picture, who was shot in the neck? Jeez. I'm not familiar with who that is, so if I'm ignorant and I'm supposed to know who that is, I don't know who it is. But I'm not gonna hit every headline either. So there's really only one main concern that I have for AMC, and it kind of all lumps into the same idea. And yeah, that was and that was your choice. I told you many times I didn't think that was a very, very wise decision. But that's okay, you know. So we have right now, let me focus on, I mean, it was your decision to make. It wasn't my decision to make. Just FYI, you already know that. But I just remember having those conversations and being like, I don't know why you're doing this, but you can do it. I just don't think it's going to happen that fast, and usually not in the way that we expect. But that being said, I'm pretty careful about, and I really am. I'm really try to be as careful as I can. It doesn't mean that I'm right all the time. We had one guy who this past year who came in a lot to say I was wrong. And one of the things that I guess bothers me about that is sometimes you're wrong is really just you're just too early. And I think that really gets people the wrong way, because I think that they feel like, well, timing is such a huge part of the market that how can you be right and be wrong at the same time? Well, you could be right about the target and you could be wrong about when it hits. And then there's sometimes where just flat out I was wrong and a target doesn't hit. And just because, and this has been repeated even against my ideas, which is fine, but even recently was repeated, and somebody said it in our Discord group. I've said it. Just because the TA is there doesn't mean it's going to happen. There's a lot of trajectories in the past year that didn't really work out, and there are some that definitely worked out. And the key thing here is that usually when it's going to work out, it's a swing motion, right? Or it's something like specifically set up on like a micro scale. We haven't really had a lot of huge macro structures, but that's only if you're kind of not paying attention. And I've had a lot of folks recently who just don't quite understand why I think there's certain targets that we might hit and others that we may not. And I gotta say, like, in the grand scheme of things, this is actually not that complex. I use a lot of wave analysis. I'm looking at really tiny details sometimes. That really bothers a lot of people because they think that I'm a complete and total idiot, because they're like, why are you looking at that? It's the whole thing is, it doesn't look like this one little thing, zoom out kind of stuff. I'm totally aware, and we've gone through this a dozen or more times. But what I've said is that, and I'm not going to do a full-on recap here, but what I've said is that this is one of those things where you can go as deep as you want to go, or you can keep it really simple. And the simplest way to understand this is probably the easiest way to also understand why this might run and where it might run to, and why right now it's such an important time. And I'm not even going to look at anything but just the price, if I can get it to focus. So when I look at this chart, there's pieces of this that don't look awesome. I don't like that most of these are giant U-shaped motions. You really have to kind of almost blur your eyes and just sort of look at the major shapes to really see those M-shaped type moves. Like, this is the way that the operator has moved across the ranges, right? So you can see, like, there's not really much problem in the buy-up. The problem is that this distribution is very long-winded. So we get these big buy-ups, and then we get these long-winded distributions. And the moves up are always pretty darn fast. I mean, I don't know how anybody could look at it, except for like a couple instances, like this right here was slow. But like almost every other move here that's to the upside happens essentially like right away. And then we spend a huge amount of time in the higher range, which is actually a bullish signal, because it means that there's tons of buying and sellers are kind of like creating this wall and then dropping it. The other problem, I guess you could say, is that, well, that might be true in some cases depending on volume, but then it's not always the case if you just have shorts covering and then re-entering and then covering and then re-entering. Yeah, that's also true. There is times where like we've been like in those situations, but like I've been trying to say for like 2 years that what I think is going on, and I'm not being hyperbolic here. Like, I genuinely have been talking about this for a long time. Maybe not 2 years, but like a year and some change plus. I mean, it may be like a year and 8 months now, right? Since January back here in 2024, when this first broke down, it just occurred to me that this was really similar to other setups we've had. And it's probably going to do one of two things, because this is more than likely, and it is, I'm not going to, again, overcomplicate this, but it's more than likely just combing through a bottom region in order to push back out again. I'm very doubtful, although it certainly isn't impossible. I'm not going to say like it's impossible. That's silly. I'm doubtful that it's going to go down indefinitely. Now, somebody else looking at this can see what they want to see, right? And you can certainly make arguments. Like I talked about S-curves here. You can make an argument that this is like a big S-curve, right? And it's going to dump to $1.50. Like I can do that pretty easily. You know, it's right there. Like you totally could make that argument. You could defend it and say like, I just don't think this is a bullish chart. I think it's going to go down. I'd have to make it like kind of slightly out here. I think it's a bearish chart. I think it's going to go down really far. And what we're really doing is we're just kind of building out, and then we're going to drop down, and we're going to iterate again, right? You like that word iteration, Booksy. I think you're right, but I think it's going to iterate down here, and we're going to travel between 150 and 250. Sure. You know, and I was making a point on the Discord to say that really in most regards, that same exact idea existed in 2020 as well. It wasn't it wasn't a stretch of the imagination looking back at this to find essentially like the exact same thing. And so I went and I did it on the Discord group, and I showed how like, I mean, really that same idea existed here in droves. And you could go back in, and I'm not going to do it right now, but you could go back in and find the comparable points of interest and mess around with those and say, yeah, like this was really meant to go down here. And well, there we are. We're there now, you know. Maybe these are future targets. I don't know. You know, I couldn't tell you. What I could tell you is that even in the midst of all this, and we looked back at it, and I'd have to find the chart that I used, but it's pretty easy to find an S-curve here. I mean, it just is. Like, even just using sort of what we have as like basic, it kind of got there, but it didn't really, not all the way. So like, I guess my point was to say, look, if you focus too much on just whatever it is, up or down, that you see, you kind of miss what's going on in the sideways. And the sideways is probably the most significant of all the range kind of things we talk about. You know, we don't need to look very far to understand that when it went in 2020, it didn't exactly feel good being down that low. Nobody would say that. And yes, those levels are basically the same levels. You can see it right there that we're on now. You know, that's the creek retest, right? But you could see it how, like, there certainly was possibility that this could just keep going indefinitely. Why not? Well, ultimately, it's what happens right here at the very end, which is that you don't have the strength to keep going. There's not enough sellers, and this was a huge sell down. Like, we know already that on balance volume was the highest that it had been in this entire range. If you look at where did it peaked right here on the 4 hour. And then it drops to almost where it was in the beginning. It actually dropped to where it was right here. It's like a complete and total reset of on balance values. And I think that's kind of interesting, you know, to see that kind of flip-flop. But my point in saying that is like, look, I totally get where bearish ideas are coming from, and I don't think they're completely wrong. Like, you can look at some of these things and be like, yeah, this was, you know, starting to turn down. It could have gotten way worse before anything else happened. And I don't think anyone in their right mind would look back and say that that's not a possibility. You know, if it hadn't broke out where it did, I think it could have been way worse. So when I look at this, I'm like, I don't really see this as inevitabilities. I see this as like, yeah, there were definitely times where this could have just dumped. But on the whole, did your operator have accumulation or distribution in mind? And I think the answer was in kind of the markings and what happened here and yada, yada, yada. I look at this and I'm like, look, it's kind of obvious to me that that right there is the reason that it ran. Like in the end, it has a strength test right off of the phase B bottom right there, and then it runs. Like it breaks out again, and then it goes. Like there's 3 creeks right there that it jumps. Maybe more if you use like the tightest ones. So what was happening in this time period is very important to understand, like that this was essentially like a critical moment for AMC because it needed to pass what we call a strength test. Sometimes you see those ST things on, and you think that's support, and it could be a support. That's a good way to look at it sometimes. But it's also important to remember that every time you push up and every time you push down, the simplest way to understand that is to understand that it's a strength test. And when you understand that it's a strength test, it's a little bit easier to read when you can see volume and other things. It's easier to kind of understand what might be going on, right, with buyers and sellers. And I'm not going to go into all that kind of stuff in theory, all the theories about it and stuff right now. But what I will say is that more typically what you see is that as you exit, this is what needs to happen. If you go into a strength test down low, which people call a spring, and you recover, you need to see it hold that support, and then it can go. We've seen this kind of motion so many different times in so many different ways. It's no different than almost every other time. I mean, basically every single time that we've gone into any of these. Some of them are a little more insane than others. You know, this one's like essentially in an SOS here, but you can see like there's the test low. You're like, oh, it's not a test low. That might be the bottom. This could have been an LPS. I know, I'm aware, but this is a different kind of a bottom, right? You can see that it drops low, and then it makes a higher high, and then there's a strength test, right? And the strength test ultimately holds up. That's a change of direction. A higher high and a higher low, and then it breaks the creek. Like that's all there is to it. It's pretty straightforward. When you go back to something like this is a different kind of time for AMCs. That they're already in a downtrend at this point. There's things that you can take for granted in an uptrend that you really can't take for granted in a downtrend. But it's the same concept. There's a push here, low below the floor. There's backup, and then there's a secondary backup right there. And it looks like a nice little M cross. But really all we're doing is we're going back and we're just retesting these floor levels that we already explored previously. And once it finds that support and then it jumps the creek, then it's gone. Like it's really straightforward. Now you probably didn't come here for like an elementary lesson on supply and demand, but like I'm genuinely still surprised by how many people don't believe in supply and demand in the market and don't think that it's possible to see it because they think it's all rigged. And I'm like, look, you know that I've seen things that really are like kind of way off in the future. And I do think, yeah, there's institutional markers that mark off certain things. I've been doing a lot of trading on my own time, and I've been using those markers to find and identify rebound points, and then using like Fibonacci to help sort of figure out where that is and the stopping areas are. Really straightforward if you think about wave analytics and stuff like that. When we go from like these micro examples, right, to like macro examples, this is a good one right here. This is the kind of stuff that gets people, I think it gets us kind of like screwed up, right? And I do think there's legitimate reason to be that way. So like one point of interest would be like this, and this is the range that of all the ranges, this is the range that's the most concerning for me. There are things here that are not the same. Okay, so like one is that when this pushes up, this does have a pretty massive distribution. There's a 1, 2, 3 push. It never comes back down to the bottom, right? And then you get this kind of secondary action. This is starting to look familiar, right? And then it doesn't come back to the bottom again. And then it has this like push up, and there's some kind of like a sideways action. And so someone looking at like, like a fractal based kind of idea might look at this and say, it's just like what we're experiencing now. We're about to dump and go to like zero. Yeah, but, but remember, like these are strength tests, right? And to some degree, there's truth that, yeah, that could happen. Nobody's going to sit there and say that could not happen. It's not possible. But, you know, looking at the way this entered and what was going on in the beginning, one could say definitively, like, well, this didn't even make it above the top, you know, and it has like weakness. And in the end, we still got a massive, you know, push. Granted, you know, there's things again that are pretty different. Like where this is already pushed up to here, and then it also pushed all the way up to the top. That'd be like us pushing to 11. It did it in extended hours, which nobody could say that's happened. There's a reason for that, and that has to do, I think, with what's being back tested, because it didn't back test those things here to some degree, yada, 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 right? So I'm certain that a lot of people could look at this and find reason to say that, well, it looks more like a distribution, so on and so forth. Well, I think a lot of people did. And I mean, there were people back here who were saying that they thought this looked, and I said it did look suspiciously a lot like this right here, right? It looks like almost like a micro version of the same thing that you see on the distribution, right? And then likewise, you could say, well, this is possibly distributive and it could dump, and yeah, it could. You know, but again, reasonably speaking, there's no reverse split here. There's no, we're not in some kind of crazy high point for AMC. We're in a low zone. And honestly, like even if we did dump, which I'm not saying we will, but even if we did dump, I think your middle is like maybe like that anchor that's being used quite a bit is that 319. You might see, you know, something as low as like 180, but that's not exactly scary. We've been talking about 180 for a long time. Like that was a long time ago, called out, not just by myself, but like a few others. So we're not talking about some kind of a cliff dive to like zero, even if we did drop, right? And then at the end of the day, it's like, look, I get where that's coming from. I do. But I'm also of the opinion that while we did make certain tests for sure, if you look at this in its simplest of forms, and I'm just kind of recapping this because I think it's really important. There's a lot of confusion about why I think this or that is kind of scary or this or that is nerve-wracking or whatever, right? Why do I think 320 and 340 is nerve-wracking, right? Because of this right here, right? There's just a very simple trend. And this trend is the trend. It's not the only trend, but it's the biggest, most important one. It goes back, if you're going to pick one thing, right? If you're only going to pick out one trend, you could use maybe that creek line that I had established. But ultimately, like this one right here is the big one. And I've been saying, again, since about January that it's probable that we're going to do something similar. You know, it's going to be this kind of macro wave. And I did this analysis a while back on waves, not Wyckoff. So don't misquote me, please. I did a wave analysis, just looking at like what was kind of expected and what did I see and this and that and the other. And I saw a lot of upside potential, but most of it looked like it was pretty far out there. Like for the most part, you don't have to look very far. I mean, you can go back maybe a year if you really wanted to. But for the most part, I've been fairly consistent with where I thought that might be. I thought we would probably hit 14 at some point, and we'd probably hit 250. We might even go as low as the dollar range at some point. Some of that stuff changed with shift values, but there was a chart that I did in January of 2024. And it's not, again, it's not really that complex, though maybe it seems like it is sometimes, because you're like, well, what are you trying to gauge here exactly? It's not, again, it's not that complex. It's ups and downs, right? And it's just wave cycles, which is legitimate. I don't think there's any reason to doubt those things. I think that what people maybe get confused about, what signifies a rounded top doesn't look like a top, looks like a U. Well, that's because that's what they look like. Just like a bottom doesn't look like a rounded bottom. It looks like an M, right? So the tops have this kind of contrary shape, right? Just like bottoms have these contrary shapes But on the whole, like you're looking for wave analytics, you're just kind of looking at where is the middle and then where are these waves kind of traversing and pulling us up to. So naturally, like in times of distress, for example, back here after we had dropped down in April of 2022, this is a long 100%. I think it was like 180%. This is a really long climb, but I was really confident. Why? I don't know. I was really confident it was going to come back up at least to that $25 mark at the time. Now it's like 140. Maybe it would go to, if it jumped the creek, it'd go beyond, which didn't happen. It didn't jump the creek, did it? And again, like I was talking about this parallel structure, and I may not have the exact right one, but this parallel structure is absolutely, that's just the link for the video. I just accidentally pasted it instead of. This parallel structure is the same parallel structure that we had before. It's the same directional moves we had before. So like, I look at this stuff and I'm like, look, man, there is certainly evidence to suggest that maybe we weren't intended to be as low as we were going to go here. We've already talked about the shift value. It actually does put it up right in this area. So if you're wondering, like, does the shift value kind of fix? Yeah, a little bit. But then again, who knows? You know, maybe there was some kind of an operator idea that this might happen, that this was going to be forcing dilution way back here when they realized that, you know, hey, retail's not going to let them dilute. They're not going to let them raise money here, which in retrospect was pretty dumb because obviously, like, they could have raised a fortune back here. And they raised some, but ultimately people were so concerned about a squeeze, they didn't allow AMC to raise more money when they could have raised. I mean, I'm not saying it would have been immediately pleasant. It probably would not have been. But I don't know anybody that could look back when it was like 60, 70 bucks and think about that time and think, man, if they had just raised money then, we would have been screwed. I was like, now I'm looking at them like, yeah, they probably could have paid off huge portions of their debt. More than likely, you know, I don't know. So it's in the past now. So anywho, I looked at this and I found that this was likely an expansion, right? An expanding motion. So look, when you do it like this, and this is again, the simplest of understandings, in my opinion, I don't find this to be particularly controversial unless you just don't think that wave analysis is legit, which to me, I'm like, that's kind of ridiculous because, I mean, the whole market's just sine waves. It's ups and downs, right? And you're trying to read the ups and downs of the market is about understanding, you know, well, where are those ups and downs? You have these channels that have been lost and other channels that we've kind of recaptured. But we're in this pinch point, and this is where it comes to a head, right? It's like we've been slowly walking across all these different parallels and whatnot. And we're really at a place now where you're kind of in between two different zones. And I had a chart that I put on the Discord group. There's two main parallel groups, and you're in one and you're trying to get into the other, basically. And you can see like the problem. We're kind of like sandwiched in between some pretty key and critical areas. But notice like how if you look at this as a wave, it's essentially impossible to see this as negative. Like, yeah, we could drop, I guess. Like, it's not impossible. You could have some kind of a significant drop. Maybe, again, there's something to do with the shift value causes this to mess up. I could see that as an argument. But at the same time, I'm like, I'm not really sure what would be the fear here. Because all I'm seeing, at least at present time, to the best of my abilities, again, either we're going to do something like this, in which case we still got a ton of room. Like, I can't imagine not coming back up to this area, especially because we have gaps, which is around $5. That's no different than like if you thought, well, I think we're in a bad spot, you know. Okay, I don't really get it because these areas also were going back and retesting like previous floors, and like our previous floors have only been retested maybe once, maybe twice. And again, it's like the equivalent of us going back to this area right here. But we really haven't actually come back up and checked that region right there, which is like slightly above where we are here. I'm not going to, again, go into like hyper detail about this kind of stuff. I guess my point is that, like, look, I'm not saying like it has to go up. That's not what I'm saying. But what I'm saying is, if you look at this as like, hey, there's a long-term trend here that we are definitely at right now, right? You really are running out of room. I'm not saying it couldn't go sideways until November. I guess it's possible. People have said multiple times, they said, well, couldn't it just go over here until then, or drop down and do some kind of inversion? Yeah, and again, that's like the 180 analysis. But really just looking at this as like a strength test right now. So when GME was going to have their earnings, I'm looking over at GME like, you know, GameStop was doing some weird stuff before earnings. It had done this kind of up thrust and then drop back down. And there were local creeks that I don't have on the chart anymore. Excuse me. But there were local creeks, and I was sharing in the Discord that, like, it really was just kind of like pushing high, and then it was like basically just racquetball, right, between ping-ponging between these two creek areas. It wasn't really holding any of them particularly well. But when it did get to this bottom, I noted, and I put it in a Discord message, that this actually looked a lot like what I had drawn. Because I had drawn something that looked like this, and I said if it does that, it'd be pretty bullish. And I had done it maybe a little further over, like right here, because I thought maybe it would do it like into earnings and dump into earnings or whatever. It's kind of like that. But what's weird is that, like, the idea here was that you're basically going to do one of those bottoms that we talked about, where you're coming up high, and then, yeah, you do come low, but then when you recover, you're making a higher mark and you're going off that bottom. And so there's this idea of, like, you're doing a strength test, you're making that higher push, and then you're going. Some people call it a W, right? Because that's what they see. It's just one example of many different kinds of bottom structures, diamond structure, if you will, something like that. The most important thing is what happens after. Does it hold that support, and then does it continue, so on and so forth? So I noted that, you know, this actually did happen here. This dropped low, and then it went high, made a new high, and when it came back down, so like weirdly, it wasn't nearly where I thought it was going to be. I thought it would go to 24. It didn't go to 24. It didn't even get close. It only went to like, well, I guess it got close. It went to 23.68, but I thought it was going to be like 50 cents higher, okay? It didn't get that high, but it did do it right here, and it did hold. So you can see it went back and it retested. It was a big throwback. I mentioned that this is scary because ultimately, in order for this to happen, it had to come back down and retest the floor, but it went so far that it looks like it's doing like a whole throwback. And the reason that's scary is because it is breaking down again, like it's going backwards. And I was saying this in the Discord group, like technically this is a really tough one because it's like a second advancement over this creek, which is kind of the prevailing downtrend. There's an early push here. That's like a push of resistance. Doing it twice is scary. And I think anybody could have easily looked at this and thought, well, all it takes is some more downside. And the truth is, yeah, I think if this had dropped below here, it may have hooked and just continued to drop. And then we would look at this and be like, look, it was just a compression here. And it did. It compressed all the way into August 29th. It's like up, there's like chop, 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 chop right there into the 29th. AMC does the same thing into the 28th, 29th. If this had dropped that level, it would have been, oh, this is as fine of a line as you're going to get in the market, right? Is like this point, 22.31 at this time had to hold in order for this to rebound the way that it did. I don't really care if you think it was going to happen or, you know, it was random or whatever. It had to hold. Like whether or not you agree or disagree about whether buyers had any real influence, it really doesn't matter because at the end of the day, like even as an observer, you're just going to have to just take it for what it is. And either it does or it doesn't hold. And if it does, you're in good shape. And that's what happened. It held, and you're in good shape for now. Now, what's the problem? If there is a problem. Well, the only major issue at this point, if you're going to bring up anything, would be the idea of expansion. So you have this idea of contraction where you're basically going into a point here around the 30th. And so when I talk about those things, I'm really talking about the, and I'm going to get rid of some of these extra lines here. I'm really talking about the buy-up process. This was like an M-cross that has like a test, and then there's another one here. It looks a little like an LSPY, like a bear flag, but the difference is that it's not exactly bearish because it's not doing things that normally a bearish range would do. I'm not going to use this one. I think this is like a midway, but I guess you could if you really wanted to use that one. I don't know. I don't really care that much at this point because I'm like, well, it almost doesn't matter. And at some point, this starts accelerating anyways. And so roughly between maybe the beginning of the day on the 27th, right here, and the end of the day on maybe the 29th, which was a Friday, that had to be kind of the end of it. And I knew that when it was going down, it didn't really bother me because I was like, man, we're iterating down. And that's usually a bullish sign. It also didn't bother me because on GameStop, even if it dropped here, and we did this chart analysis, I don't know, several times over the last few weeks, I guess, but I haven't really streamed that much. So it's probably been about a month for some people. We did this analysis a while back. This is like the place where it runs. So it's not that, again, it's not me like having crazy delusions of grandeur. It's like, I was looking at cycle analysis, and cycle analysis was saying that, yeah, basically the analysis goes back to September here, and then there's a bigger wave that goes back even farther to maybe November of 2022. But ultimately, this is the same wave that I was looking at for AMC, which started in September right here, right? This breakdown in August, that's the middle of the wave. Middle meaning like between the peak and the valley. Right? That's the center mark. What does that mean? Because, you say a lot of these things, but, well, it just means that, again, if it's following the chart as it has, then it's going to be repeating that wave cycle, however that wave cycle appears. And I've made a point that if you go back and you look at these they're actually all in the same breakdown, which is kind of interesting. This marker here, it's almost like a one-to-one with what happens right here on the big picture, what happened back here before that May run. This is just a bigger version of it, and it is. It's just like a bigger version of like kind of the same thing. And then you go back to 2020 and it's like, it's the same lines. Like it's not any different. Like these are the same markers. They're still the same. So a lot of times people will ask, well, is it the same? Do you think it's the same operator? You think it's the same people in the play? You think the short's covered? I don't know anything about shorts covering. I'm pretty sure that a lot of them got burned. We know that because there's evidence that a lot of them got burned. I would say that beyond that initial burning, I'm doubtful that very many shorts stayed in the play that haven't made a lot of their money back. But then again, a lot of people think, well, that's ridiculous. It could be 5 years going on now, and they could still be in the play. Again, it doesn't even matter to me because I'm looking at this and I'm like, yeah, I can see that. I can see why that was maybe bullish. And ultimately, like, we're repeating the same patterns and getting breakouts. So why would we need to look at this and be questioning that? We can question it until it doesn't, as much as we can be skeptical of it. But ultimately, if it works, it works. And so there's three or four big markers. 1, 2, 3, and 4. And we speculated whether or not it was going to be likened to this. And I'm not going to get into iteration talk because that's pretty boring, but there are iterations and they are worth talking about. But this ultimately represents the same wave that we see on AMC. It's just what? A different direction. Like AMC's wave is not going up. That bothers a lot of people. It might be expanding. It's not impossible that it's an expanding wave, meaning it made a higher high and then a higher low, and then it's going to make a higher high again. But it sure as heck ain't an uptrend anymore. That ended when the stock dropped below the lows. You can't say it's definitely in an uptrend. It's not possible to say that. But again, like looking at these kind of markers, it's not that difficult to see what I'm talking about when I say, again, that this is in that kind of a same model as AMC, albeit we have to take into consideration what's likely and what's not likely. And I think that there's positions here where people will say, well, it's going to go back to like 900 or something. Look, man, it's possible. But I would have to suggest to you that more than likely, what we're really looking at here is the development of a new trend. In my opinion, that's what seems very likely to me. And there's this kind of an area, I don't know if you can see it very well on this chart. It's kind of hard to identify. But it really, again, it almost doesn't matter because it still identifies as a good, and I'm not going to be able to, I'm not going to bold it. I'm just going to try to put a box in here so it's easier to visualize. This seems to be the most important of all of the markers. And I think you would agree. And so it would make sense that when you look back at this and you see that, you're like, you know, it's a bounce in here, drops, bounce in here. That looks a lot like that one diagram you draw. Yeah. And then this looks like a mini version of the whole. That makes sense. Couldn't you have another mini version of the whole right over here into June or something? Yeah. And we talked a little bit about that. I think Richard, I forget his last name, but he had mentioned something about maybe being stuck in this zone. It's not impossible, especially given the whole warrants thing around 32, that there's some kind of a, I don't know, gravity to this area for a time going into October. What I will say is that October 3rd, if you care to kind of like go back and look, October 3rd is actually the day that this broke through that yellow mark. And so for as much as I want to like, I always want to like try to, you know, not be, I really don't. I think it's stupid to be prideful in the market because you can get burned super easily. Like anybody can get burned at any time, especially if you're prideful. But I got to say, guys, like, this to me, this idea of like, oh, it's dropping down on September 29th, and then literally the next week is October 2nd. That's a Monday. My cursor's on it right now. October 2nd. I'm not here to just kind of like brag, I promise. All right? I promise. I would not do that. That's a huge waste of time for everybody involved, right? But what I will say is that doesn't surprise me at all. The fact that they were saying that it's going to be at like 32 or something around that time, or like that's where the cutoff was, or yada, yada, yada. And I'm like, all right, well, that's when it passed through this range. It's got the markings of kind of like a repeat to back to that area. That's 52, and that lines up with the creek. Maybe it's a little lower if you use certain criteria a little differently, but October is not normally the time when you would expect a run in the market. And I think that that's part of the reason why a lot of folks were like, this is kind of silly. The market usually goes into a downward spiral. And I'm like, yeah, it is usually a soft time in the market. September, October, typically kind of bad. This year is a little different, I would argue. This year we've got inflation data coming up in a couple days. We have FOMC, where there's almost a guaranteed rate cut. We have AMC and GME that have really not moved off their bottoms, even though some of your bigger tech companies and all this other stuff making new all-time highs. Rate cuts are good for the market because they bring about more liquidity. It's just standard stuff. There's more money in the market. We haven't really seen that rotation yet. Yada, yada, yada. Right? We can go on and on and on. But my point in saying all this is to say that, like, we already had in view the possibility, not inevitability, but the possibility that this was going to head back up going into October. And I'm not even joking. I have it on my chart from forever ago now. It's like that's October 3rd right here. Like those were my trajectory markers for October 3rd. Maybe it's not at 40 on October 3rd. I don't know. But all I can tell you is that that's where it was. And ultimately, like looking back, it has revisited these markers on a pretty substantially like consistent beat when it comes back to this yellow zone. And the last time we were really in this yellow zone was way over here in July of 2024. And you might say, well, does that mean it's a year out? No, because it's just a measurement based on what exists already. So I did this previously, and I did a measure here from when did it drop out and hook, which for us, again, was way back here in July. When did it revisit it? When did it have like its middle breakdown here? When did it break back out? And again, like maybe I'm a little bit wrong about it, but I who knows? Timing is really tough. If I'm wrong and it's not this marker, then it's this other gigantic one. And that is significantly different. So it's important to note, like, yes, if you're wrong, Booksy, you're very wrong. Like it could be way out over here, right, in November. So that would really stink, right? If you're somebody that's loading up on October calls or something. But what I would say is that, you know, I don't know for a fact it's going to be there at that time. But I do know that right now, the way that I had measured it initially was there wasn't that big of a window. Like I kind of saw like a few different possibilities and I marked them off. Most of them were kind of later. I actually don't have a lot of those on the chart. These are like extra things. I've been moving these things around. I think I moved this one earlier. I shouldn't have moved it. But one of them was like the 15th, like going into that week. That's pretty similar to time frame that we saw back here when we went into this particular squeeze motion, which was again going into the week of the 15th, the 13th. I'm not saying it's doing the same thing. It's not necessarily. But we also still have like 2 more days this week. We don't know exactly what's going to happen. We do know that when this crossed up, it's very similar. And I don't know if you can see that, but there's that bottom, and then it pumps up and it pulls way back down, right? And this was going into Wednesday the 1st. And then we get this big push Wednesday to Wednesday into the 8th. And then finally, as you're aware, Friday the 10th is really taken off. Are we in the exact same situation? No. But if you look at this on like a huge scale, and again, go back and just kind of see what we're observing here and like what it is that we're actually looking at. You look at this on a pretty big scale. You can see like that marker down. And that breakout doesn't even really manifest till it's way up high. I mean, because you couldn't have possibly broken out, at least on the highest of the trends, till like here. So it had to have this like huge move to the upside. That makes it really difficult when you're on alert and you're trying to buy in for GME, right? Because you're like, well, is this it? Is this it? Is this it? I don't know. Why not? Because when this went up, it made a new high. What I can tell you is there's a bit of a megaphone, if you want to call it that, and it could have dropped low, still could drop low. If this drops down, I could see it going down to 18 still. Well, no, we can't do that. It's over the creek. Yeah, and that's typically very bullish unless it does what? Like what this did. If it drops back through, has an upthrust, and then drops back down through, it's probably because it's using this as like an alternative strength test, pushed up, and it did. It hit the top of that. That's fine. It didn't go over it yet. If this drops back through, and especially if it like gaps down or something, there's really nothing preventing this from driving it down. Is that now going to flip it around and make it the opposite? Well, I don't know. So where does it end up on October 3rd? It may still end up here. We don't know what's going to happen when that bell rings that day, right? We know that to some degree you could consider it a little bit dilutive if you want. They're listing it as a split now because you're adding 1 share for every 10 shares, potentially. I mean, it's a warrant, but you can, get a share from it. So at a particular value, right? So naturally, if it's like way up high, there could be a lot of selling. If it's way down low, then it's undervalued. And if it's right at 32 on that day, then it's exactly the value that you're getting, right? It kind of does nothing, right? Well, isn't it interesting that I had another marker here thinking that we might just stop at 32? I had no idea that they were going to issue that 32 warrant. I had no idea. No inside information, I promise. I just didn't. All I'm doing is like random technical analysis stuff. Okay? What I can tell you is this is an iteration that has ended. It is the same for AMC. There's an iteration here that ended right on August 29th. It could go either way, and that makes people angry and anxious and all this kind of stuff. What I've been very verbal about is that I think that this is a bottom. I do not think it's a top. I do not think it's going for another drop. I think it's a bottom, and it has yet to make the wave back up. And I said a long time ago, again, in that really old video, if this were going to go down potentially forever, right, you'd still want to come back up at some point and trade high. And even though that may look like it'll never get way up here, remember, like, even in a distribution, this thing popped, came way back up, right? Had a massive push up, very similar, and it would be going to the top right there at like $13. Isn't that where we said that that fair value gap was when we were talking about that? And yeah, 13 to 15 or something like that. It was up there. I can't remember. It was like 14 something. So like, do I look at this and think that these trajectories that I saw early on, do I think that they're bad? Do I think that they're not going to come true? Do I think that it's going to go way down? Or, no. Like, I'm telling you that I'm bullish. I'm telling you that I think this is a bottoming, not a top. I'm telling you that I don't think that ultimately, like, this is designed to distribute. But you also have to just keep in mind, like, even if that did happen and it did distribute, you're still in this position of, like, pretty good odds that it's going to come back up. And I had, this question of like, oh, it's not going to run 300%. Well, where is it going to go if it goes up? Well, I'm telling you right now, that marker in the middle is probably the best marker that we have. It's not the only one. There's other ones that are lower, but this is the one that's the most consistent, and it reads the best. And it also is the one that we see in previous examples, which has driven it, like, again, driven it home. Like, this is consistency right here, and that's the most important thing for me. So I'm like, look, it's in a bottom wave, in my opinion. You got a big buy-in. It's a long-term sell-off, but it's been iterating down. There's always the possibility it could drop, of course. And I think it'd be silly to look at the current time frame and say it couldn't do that. Couldn't possibly drop. That'd be ridiculous, right? But I don't think it's that much of a stretch to consider that when it gets to this zone right here, which is the one I'm the most concerned about, which is about 320, all the way up to the previous high at like 350s, that's the zone I'm the most cautious of. When I look at that, I think that's the most likely place that you could end up with some resistance. Or let's just say like an upthrust, since that's what we're worried about. Right? If you're going to have a distributive action here, it's not impossible that it could just keep selling down. I mean, we don't know what we don't know about shorts in this play and things like that. And obviously a rotation here would be quite detrimental. You could see, like, if you really rotated around like 3 something, this could go down again to like $2. There it is right there. There it is, November, right? There's your argument for downside. Like, it's not that complicated. It's pretty straightforward. That's about as far as I could push it. And I can't really push it to 1. I've tried. I can't really do it. I've tried. I have. I could maybe make an argument for coming down to like the $1.80, $2 mark region. And then at lowest, I've been able to get it to like 150. That's the lowest I can get it to. But a lot of that requires, frankly, just a huge amount of, I don't want to say like fudging the numbers, but there's a lot that has to happen there to sort of make sense of it. And I still think that what's more likely is that if this were going to go, that you would get some kind of an upthrust, probably, probably to at least above this top before you go, because we haven't checked this in a long time. Like, we haven't tested this area coming down. It's probably going to go to like 320s if it does drop. Well, you heard it. Booksy said it's going to drop. But remember, if it did drop, which is a possibility, it's not impossible, but even if it did drop, it's like, how long is it going to stay down there? Well, until the new year. I don't think so. Like, it's the same thing with GME. It does have room for some sideways action. Don't get me wrong. But even the most like broad brush that I could possibly measure this wave was still ending in November. I don't see a lot ending in January. So when I look at it, I'm like, yeah, there's definitely two outcomes, but I don't see it as bearish and bullish. I see it as just bullish and longer term bullish. And that's a different thing. Well, I've got all these October calls, so I'm screwed then, right? Maybe not. Why does that have to be answered by somebody, right? It should not have to be answered by somebody on YouTube. What's the chance it fills the daily gap? 2360, 24. Well, yeah. So we had a conversation about this in the Discord, and I said this afternoon, and I posted it with this little marker here. Like, technically, if you look at where this isn't really that unbelievable. This is kind of middle liquidity, and you can see when it pushed up, GameStop pushed up here, and it developed two resistances, maybe three, if you want to count it. There's one here at 2344. There's another right there at 2362, and then there's a final one up high on like the peak of this initial move, which is 2371. Not a single one of those was back tested. None of them were back tested. There is no backup to hit those marks. In addition to that, you also jumped over, you can see it. It's a clear jump over that, both of the creeks. Like, both of the ones that I have that I think are the most important, and I've had them on the chart for a while now. There's nothing changed. Those are the ones I think were the most important. Both of them, it just left. So is there a chance that this comes back down to fill that gap? Yeah, I think if it's going to happen, it probably happens within the next day or two, because we have an inflation report tomorrow. We've got a ton of stocks that are just selling down and like getting ready to do these like random, almost not random, but like they look like they're kind of at the end of their rope. And I'm like, why are they going so low? Like, we're just dropping. And some of them are gearing up with like, or big pump and dumps. Like, we saw pump and dumps all over the market today. Tons of them. A huge amount of the tickers that I follow were up high in the morning, first thing, and then they slouched, and now they're getting ready to dump for tomorrow's news. Some of them were brought really low already for tomorrow's news. And I'm like, it kind of seems pretty obvious that we're just setting up with just massive amounts of buy-in and sell-off kind of action before tomorrow for whatever happens. And I think that hedging and all that jazz is probably going on as well. I think there's probably a lot of people that are like thinking it's going to just crash the market just because it's news, right? News is very odd in the market because it's often it's backwards than what you would expect it to do. For example, like some of your tech stocks have been running forever, but I mean, they could go farther and they're not really at a place where I think they've even priced in. I read one guy who said he thought they were like, oh, it's going to be a sell the news event because it's already priced in. I'm like, I'm not really so sure about that. I don't think small caps have priced in rate cuts. Because most small cap stocks, like your GameStops and AMCs, have been going down for like a year and a half, and they really haven't shown any serious moves. to the upside. How in the heck could you say those are priced in, right? Like, that doesn't make any sense to me. And you didn't even have like a new all-time high on, you know what I mean? IWM. It's like the Russell 2000 was lagging behind the market and people were saying, oh, it's priced in and it's going to dump. I'm like, I don't know, man. I don't think they're priced in. Rate cuts, especially if they do 3 this year or 3 next year, whatever it is, if you do a lot of rate cuts, you're going to bring a lot of capital into the market. Maybe the economy is not in good shape. I get that. But at the same time, it's like, I don't know if I believe that they're priced in. So that to me is a little odd. I'm like kind of scratching my head about that one because I'm like, I don't know, man. A lot of these tickers were selling off today. They're really low. Not all of them. I mean, we're looking at GameStop. It's not like super low, right? But like, there were a ton of tickers that are like came way down into this FOMC week, and I'm like, they're already like bleeding out. Or are they just going to keep bleeding, right? If you think there's going to be a sell-off, maybe it's a mixed bag. Maybe we'll see the larger caps have some selling and the smaller caps don't. But the idea here of this coming down and filling this gap, I think it's a carrot. It could be filled. It may not be filled. My bigger concern is whether or not it holds the support at like 2360, 2362. It would be a double whammy support, and it just so happens to land, if you look at the intersection, it just so happens to land on Friday around noon. You know, if this lands on top of this Friday at noon and it bounces up and it closes the weekly candle up high above these, I think you could look at that as a probable bullish sign. I don't think it's a guarantee, but I think it's a probable bullish sign, just like everything else. It's like, yeah, that's a good sign. A weekly candle that closes up here above these two trends is bullish. You could not really read it any other way. Doesn't mean the operators couldn't do some craziness in after hours and bring it down. On the other hand, if you got a candle that's mostly body right down low, and then it just has like a massive sweep to the upside and it closes way down here, could you determine that that's bullish? No. You'd probably say that looked kind of bearish because it basically just did a giant sweep and it didn't hold. That would mean that too many sellers and buyers ultimately didn't hold the support. So if your buyers don't step in there on a gap fill, and I think that's exactly the reason why they left it where they left it, if your buyers don't step in on a gap fill, I think you're in big trouble. A big trouble. Because I do think that ultimately what that probably is going to lead to is what we would call like a sort of a spring motion, right? And it's an unusual one because it's already come above the top. I mean, all things considered, this is potentially like an SOS territory right now, a sign of strength. It just hasn't. I mean, again, the problem being it didn't close high, but it's absolutely possible. It could be strong going into Friday, and then Monday it could be taking off that soon. So it's like all of these like tiny little things. I'm just gonna like kind of summarize it and just put a cap on it and say it's done. I talk a lot, I know. And a lot of times I ramble about things and people get bored and they leave. Because I am boring. I mean, I can be very boring. I try to be as enthusiastic as I can about it. And I am enthusiastic about it. I want this to run, okay? But that doesn't mean it's definitely going to run. And I have to look at this as if it's just lines on a chart and numbers. And right now, this doesn't look particularly bearish. It doesn't look particularly bullish. I'm not very happy that it didn't close high. It would have been nice if it closed up higher and the daily candle had closed above, the previous top. That would have been nice because otherwise it does look like a sweep, right? And it did. It went all the way up and then all the way back down and ended up sitting beneath this 2440 area, which isn't really ideal for me. It's okay though because it's still above the creeks, so it just could just mean we need to go back down low. And that's fine. That's exactly how I would read it. If I were trading this, I'd be like, yeah, I mean, it's up. It didn't exactly hold anything super strong, but I mean, at least it's held above the creek. Didn't hold above the tops here. And it looks okay. I don't think it looks bad, but I don't also think it's the best it could have been. And it does make me nervous because if it drops, I think there's a chance that if it drops, it's going to be essentially like a full-on flush. And I would have to suggest to you that the flush is more than likely going to go back to where it started, meaning like it's like a 50-50 marker. You're basically going to come back to 2246 and then drop down to like 19s if that's what happens. Not trying to manifest that, make it happen, guys. Manifest the destinies. I'm not trying to make it happen, but there are certain evidences here that suggest that if it dropped there and it came, it hit this next mark, it's going to plunge pretty far. And more than likely, we're looking at a situation that's more akin to what we saw. And that this kind of changes things, right? Because then you're waiting for it to come back out, as opposed to this guy, which jumped the creek, held it, and then advanced immediately. Within a day or so, it's moved really far. So that's what I'm saying is like, if it held here, then by next week, again, Monday, you could be like taking off towards 34, 35, easy. Start with 29, but you know what I mean. You could be moving. And then it's kind of like game on for the wave. But on the other hand, you can't really write off the possibility that it drops because if buyers don't step in, buyers don't step in. We don't know exactly how the market's going to digest news in the morning. We don't exactly know what that's going to bring about. But one thing you could say for sure, this did happen over here, right? Is you can see that this builds in. It has a bit of a widening. It's kind of like what we just saw, right? This tries to jump the creek, but it fails. This is way back in 2020, right? This kind of pushes the resistance there. You can see it does. It tries. It makes a higher high. Ultimately, this widening breaks backwards, and it does like a 50-50 down. And it hits the low on a trend that we can actually track in current time frame. And then this is not a big deal in the grand scheme of things, because that's what was interesting about all this to me, was that if you go back and you look at the current place where that is, like let's say it just dumps straight down here. It went all the way down, even farther than expected, which I don't know why it would, but I guess it could go really far. Even if it went all the way down to that marker by September 17th, which is where it intersects, which is FOMC, that's $18.20. Look at where that is, like in the grand scheme of everything here. It's like a halfway point here. It's basically, or a doubled up point here. It's essentially like the cat ear is kind of done. You've hit the bottom there. And then it goes back to where we were at the very beginning of May when that thing took off. And incidentally, also where we were in September of 2024, which again confirms the idea that a 2-year cycle is viable. I mean, it's a very strong possibility. We're trying to get back to that point. What makes you think that's going to drop and AMC is going to run? Well, I don't know. I don't know for sure. But I can say that if you look back at where we were at those times, it does actually triangulate quite nicely. So like if you look at where this was here around, mid-September, and then where we were again in May, and then where we might end up again, if it should drop for whatever reason, it doesn't hold that level, and then it drops down. If it goes down to 1824, that's the same level. 1, 2, 3, right? It made it back. Interesting. It's also like a macro uptrend level. It is pretty interesting. So then look at September. Where were we at in September on AMC? Well, September's a little weird for AMC because it's actually kind of low during that time period. It's not really high up, is it? It's not. It's kind of low down. You might even go back and look at early October, and again, same deal. It's like, well, October 3rd, it was down here at $7.83. That would be nice if it were back to $7.83 by October. It's possible. It could be up there. This is kind of like the one way we had the leg was like this, and then basically going again later, something like that, right? Sort of like a 1-2 move. That was one of the ways we had it. Another way to look at this would be to look at this in terms of trends and like kind of where it is on these particular trends at these particular times, right? And this is a more challenging one for AMC because AMC has, well, it has a lot of issues. It has a lot of issues, and it's like I don't. You're probably thinking what I'm thinking, which is like, where the heck would you even draw that line? Yeah, it's a tough one. You go back to May 10th, and that's really where it crossed up and over. That was where the big breakout was, and that looks very flat here on GME, because if you go again to like September 28th, it's essentially just straight line. I mean, it really is. Right through the 10th, and then to potentially where you land on that right here. I mean, it's really, really tight. Right where you maybe land on FOMC day if it went down into FOMC for instead of up, and it happened to go all the way, right? That's where it would be. Straight line. Not the case on AMC. There's just no way to do that. But what you could do, and I've done this a couple different times in a couple different ways, there's a marker that runs through here, and it is very much similar, although not the same, because the 10th is actually down here on AMC. It's really low. So there's two different ways I guess you could do it. You could argue that this might be where you get to that spring level, right? It would probably be right here. This is September. It's like October 3rd. And then this right here is May 10th. It's a bit tricky. That'd be a huge drop. That's almost impossible for me to believe. See, I don't think like that's going to happen. That's going to like 30 cents. Because like, it's going to happen, man. Well, there's another one on like September 11th, which I've talked about this one before. And this is the one that is kind of like a wrap, where it basically generated like a support here, and then it creates a resistance again. So it's a center mark for a potential wave line. We haven't come back to retest this since that sign of weakness in May. This is, again, a couple days after the GME one, so it would have to be with a grain of salt, like, oh, it's not the exact same. This, to me, could be maybe more reasonable, but it wouldn't be that long if you're talking about a sudden drop. Still, it's far. Because that was, we were saying like FOMC, it's going to be way down there. Like, that's pretty far, right? That is very far. That's like it goes off a cliff here and it dives all the way to like 180. But let me tell you, if something like that were to happen, and it did have like some kind of monumental drop, well, I don't think necessarily it has to recover like immediately. It would not at all surprise me if it had like a massive recovery. Because to me, just speaking plainly, like I would see that as a terminal shakeout. And I could certainly imagine with the curvature here that is a possibility, albeit I don't think it's the best one. But I've been saying it this whole time in different ways, that I don't care, but I really almost don't care at this point. I think that the terminal shake here is certainly a possibility, and it really wouldn't make me flinch very much if it does have a sudden, yeet and just drops. And that's why for a lot of people, I was talking about it on the Discord group, I was saying the 22nd seemed more likely than this next week because there's a lot more space. Well, what happens here to make it drop down there? Look, where it's at right now, what has already transpired for AMC, and we've gone through like all the other kind of examples, right? What's already transpired is that you have what could be the buy-in. It's pretty weak, doesn't look very strong, right? But there's certainly more volume on the bottom here than there is in the top, and that's good. That's very different than what we see over here, where almost all of the volume is in that peak. This certainly makes the case that most of the volume is actually below that floor, and it is. That's not a bad thing. You have a walkout here. It made a new high, made a new low. There's a little 50-50, and then it made a new high. Then it does the cat ear thing. This is a distributive action right there. It's starting to look a lot like what we typically see in most of those buy-ins. You know, it's very similar. It really is. What I mentioned on the Discord was that there's a zone here from like 272 to 276 that feels very likely because there's this big wick that happened right here, and the body of that candle is very high. And in addition to that, when you look at it functionally like I showed right there, you can see that that would be like the middle point. You know me, I'm big into like the M shapes and stuff. Like I would look at this as like a small wave. Microwaves. I would look at this as like this is the reversal and then this is the top. And really this is just the middle between the two. So this is the bottom, this is the top. And it did come up pretty high. Like that's not a bad thing. It did push above this level at 283. So it's showing some kind of a strength test here. It did push high. It's out of a lot of the creeks already. We already can tell that it's out of like the first one. For sure. It is. It's right there. It's out. Is it out of the second one? I think it was getting close if it wasn't already out. I think it kind of came right up to it and pushed it. That's okay. That happens. It's trying. Again, it's a strength test. It's probably why we needed the second push. Really, if you look at this, it already had the push up. It could have done a cat ear low. Instead, it pushes up high, and it hits that outer creek. So it's testing it. This is no different at all than what we're seeing. It's different in terms of numbers and like where those creeks are, but it's no different in terms of exactly what we're talking about on GameStop. It's exactly the same thing. Like it has to prove that this is going to hold there, and if it does, it should be bullish. If it doesn't, it's going to be bearish and probably going to get kind of nasty. And the same thing applies here. The only thing that I would suggest right now that is bothersome about AMC to a degree is that it didn't hold this floor yet. So there is a second part of this that's a little bit different in that it didn't actually hold above this top. But I don't think that that's the biggest deal in the world, because if you look at previous, again, we were looking at that March one, really all of the bottoms starting from right here need to be tested. So if you look at the lowest bottom to the highest bottom, which is here to here, specifically from like 267, there's the bottom right there. That's after it jumped the creek. This is really important. It's not before it. This stuff did happen. Yeah, it tested low. I know that, but it jumped the creek back here. This is the first support it makes at 267. Did we check 267 already? Yes, we did. Okay, what about all these other ones? There's a bunch of them. There's a bunch of them, right? But they're mostly, at this point, they're mostly between really like a few cents. It's not really a whole lot of variation. You could maybe say like here to here, because I guess that's the highest one right there is 283. That was a support, and that's where we pushed above. So like right now, what I'm trying to do is like just take it with a grain of salt. It's already made the advancement. It's already pushed up. It looks kind of weak, but I think that's fine. I don't really think it would look like it's going to be the end of the world. None of our springs, when they first start pushing up, look like much at all. They just don't. They come up and they start the advancement, and this is like your M cross right here, and then they need to back up and sort of like prove it with a strength test. When it goes again, that's where you see the fireworks, and it has to show that strength. And if it does not, then you don't get the fireworks. Then you get the hook and the dump. And it usually looks like is that you get some kind of a like a second attempt and it fails, and then it rejects off the level it was supposed to find support on, and it starts heading for a new low. That's the most common thing we've seen. There are other ways it could go, like it could make a weakness first, but that's a difficult one to judge, because if this dropped really fast, it could easily be like a double bottom. You know what I mean? Like, we don't know. That's a tougher one to judge. But my point is that like if it rejects again below 283, then you've got some issues. But for now, we have some good news too, which is that if you look at, it would probably be right here if it's going to reject again. Let me show you. Yeah, it would probably be right there at like 281 if it rejects early. But the thing is, if it comes back up here, and I'm just going to mark off the, this is a 1 hour chart. These are fair value gaps on the 1 hour chart. If it comes up to these regions and fails, which is kind of what I've been drawing out, that makes sense because there'd be like a wave here. So you'd have like probable rejection right in this little pocket. So if it were to come up into this pocket and fail, that could be kind of bad, right? That's definitely a possibility that that happens. It also could be that we're just dealing with a corrective phase and we really haven't come down low enough. So you have to take it with a grain of salt. You can't just say, oh, it's definitely over, right? And that I would just look back at this and say, well, when you look at this, where is the actual cross occurring, right? Because even though we've got all these creeks that are coming from on high, those wouldn't be hit right away. Those are only going to get hit if it goes selling off. They're never going to be hit again if it goes up. They just won't. Like you're not going to likely, it's very unlikely. I'm just going to say that. It'd be very unlikely that this would go all the way down here at this point, right? And hit this and then run. That'd be really strange. I guess it's anything in the market's possible, but it's less likely. What's more likely is if it's bullish, it's not going to drop beneath the middle of the M shape. It's going to hold that creek. And I have seen this at times come down and get pretty close. I remember in March 2022, it came down, and what it did is it did the shallow S-curve. It came across here, and then it dropped again. And then it bounced out, and then it went. Like that's almost exactly what it looked like. Almost exactly what it looked like in 2022. And when it came up, it went up to the top here, and it jumped back over this trend. And it was also at the same time an SOS mark. So it coordinated essentially with itself on the wave. That does happen. So like it's a possibility that this could be kind of crappy and still be okay. What I really wouldn't want to see is like a massive upthrust here, especially one that comes above these ranges and does what we call like a sweep, right? And then slides back underneath. I don't think that would be positive. We want the operators to kind of hold off, chill out. If they want to keep it down, that's fine. There can be another hook here. Like there can be like a small one. That's fine. That's totally normal. But then we want to see when they chop it down that it essentially doesn't break below. So it starts what looks to be like a, and I'm not sure how this is going to look with inflation news and all that jazz. This could be a little bit of wishful thinking on my part. But if I were going to make it go into Monday, this is how I would do it. I would basically make people bored out of their mind. They think nothing's happening with the stock. Most retail aren't looking for this. They're not thinking that was a push of resistance or a strength test. They're not looking at the higher high here as like a strength test. They're probably mostly looking at this, and you wouldn't be completely wrong, but they're probably mostly looking at this thinking that it looks more like a hook, which is true. Because if you go back and you look at this, it looks like it's pushing up and failing to get back above that uptrend. And that's totally true. It is. That's, again, it's testing backwards. And if this is going to go down, then it's already done that. It doesn't need to do it again, right? So if the strength test failed, then it's checked that box, right? But once again, it's like, where would you come back to? We were just saying. That's why I don't want to see like a UT here where it comes up, or UTAD, where it comes back up here and then slides back through, because it's probably back testing here. And you can flip the chart if it makes more sense to you. If this is a weakness, which it is, look at it. That's what I'm trying to say. Like, flip the chart upside down and suddenly this looks like, oh, it reminds us of a sign of weakness. Right? When we see that kind of stuff on AMC to the flip side, we're usually like, that's not good. That means the next time it breaks through here, it's probably going to drop. And that's usually what happens. And then it goes pretty far. At least the first go should be pretty far. Especially right here. This is really steep. Really steep. I flipped the chart upside down if you're confused. If you really want to have some fun with this, look at this and then go back and zoom out. Consider like, yeah, it could go farther, you know. I guess it could pump all the way up to there, but it's already made this. That's done. So that if it drops this trend again, which is what we're talking about. So even if it went really low, maybe even as far as like 226 or 180 or whatever, the next time it comes back through there, this still exists. So it drops that, it's going to come really far, really fast. And you can have some fun with this by going back and looking at the early chart in 2020 and comparing it here. And you'll see that this creek right there, the one that wasn't checked, that's the uptrend. The one that really wasn't back tested at all, that's where it comes back to in 2020. This guy. It's funny because like when you flip the chart upside down, it's pretty obvious like, yeah, that definitely has some pushes and then it dives and then it reverses. But there's really no major back test here. It just sort of left it alone, didn't it? Almost like they're just not interested in checking it out right now, which is probably true. It doesn't matter which one you draw, like there's no way that was checked. It just wasn't tested. Which always interests me because like we do this on the other side. We flip the chart back to the normal way and we're always like, oh, I didn't check this. That's bad, you know? Yeah. Well, it's equally bad when you don't test it the other direction as well. So even if this were to kind of be like some really horribly bearish, initially, I should say, bearish situation where it flies up high, you know, and it retests the bottom floor area, which is possible. Even if it did that, I'm like, yeah, it still has to come back here, which is why I think there's this, maybe it won't be in this singular move, but it would eventually get back there. But it's like there's this kind of idea of continuity there. I'm like, yeah. And there's also like another one over here, which I can't quite draw. This thing is like, it's like the opposite land, right? But it's really fascinating to me to come back and look at these and think about how like, well, to some degree, none of this has even happened yet. But to some degree, like it's almost like it's gonna go there, you know. This gets you to that $19 pocket in the future, right around February 2026 or shortly after. Maybe even before then, but distributing at that time, blah, 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 blah. We've talked about that. I don't want to get into that right now because that confuses people. And I'm like, I'm pretty sure it's going to be before then, but because usually it runs advanced to these lines, not right on them. It'll hit before the intersection typically, not right on it. Sometimes I guess it's been right on it, but I would say majority of the time it's like more likely going to be slightly off. So yeah, like right now, did this kind of jump the bearish creek? Yeah, it did. But then there's a decent amount of volume right here. When it tried to jump the bearish creek and push over the top, it did get a double bottom, right? So anything at this point, I think below that 265 would be like more of an extended test, if that makes sense, like an extended strength test. Like again, you're selling off just to kind of freak people out and sell off. And we don't know for sure that it goes super low, but we did have some targets that were really low. Everything else here would suggest to me that this actually looks kind of bad for bears, because if it was going to hold, it should have held right here. And it looks like a gasp for air, right? To me. Because to me, it's like, oh, well, it had high volume here. That's like a top. And then it broke through what was supposed to be the trend breakout. And now it's pushing again. So if it comes back down through that mark, like I was saying, that's like a cat ear, right? If it comes back down through that mark, but in reverse, right around Monday the 15th. It's the same as GME. It's just this really ideal setup where both of these tickers are going to be at a particular place at a particular time. And if they can manage to hold that level, they're going to be in really good shape. Yes, there's also gaps. I guess there's this gap too. I forgot about that. That's at 3. After that point in time, and there's a bunch of them, by the way, I went back and I looked, and the fair value gaps are basically equal parts halfway up to 14. One of them's at 6 something, and the others are like 14 or 14 something. But I think like when you add up, because it's like 680 or something like that, I don't know, gives you like an extra valuable. Anyways, they're exactly like halfway from the floor to the top area where that first one is. So there's a lot of areas then at this point that we would still have to watch out for. It's not like, oh, that's it, it's over, you know, yay. No, I mean, you could be that way, but, and I don't want to go into any huge amount of detail on this one. I actually already have a chart for this. But basically at this point, if AMC can hold that mark, not that one. This is one I looked at, and these were looking at fair value things. So I've got kind of a bearish situation right here, as you can see. But I actually was looking at where this might go, and I thought it would, this looks pretty accurate, although it didn't go that high. I thought if it broke down here, that'd be bad, and that's the same thing I have on the other chart. But if it comes up and it finds support, what's confusing is like, where do these come from? But these are all like the hook values, basically. I went through and I did the iterative motion and then determined where those were, but I don't have the slightest clue where that is now. And it's not on the chart, so that's not very helpful. All right. Well, again, without going into like hyper detail, these are parallels that run backwards through time, and they go all the way back to the kind of the bigger breakdowns. It's really interesting. They're all the same. And I went through and I marked them off, and I marked off where I thought the iterations were, and they certainly were compressing. And this is part of the reason why I thought, yeah, we're definitely compressing into August. There's like a clear and evident kind of reduction, almost like a Fibonacci reduction into August. I went back and I looked at where those lie, and they go all the way back to here and this trend, which I think is quite fascinating. And I checked this against 2020, and I thought, well, that's kind of interesting, you know. So it should have started right there, because this is where it jumped over, right here. So the first actual like leg of this, it's kind of confusing, but the first leg of this would be